The world of oil and gas is a volatile one, with prices often fluctuating due to global events such as geopolitical crisis, supply disruptions, changes in demand, etc. When oil prices soared above $100 per barrel due to the Russia-Ukraine crisis, domestic oil producers in India were making huge profits by selling crude oil at high prices. However, in an effort to curb these windfall profits, the Indian government imposed a windfall tax on crude oil, which is a kind of a tax on the profits of companies that have experienced an unexpected and significant increase in income due to unforeseen events. Initially, in July 2022, the windfall tax on crude oil was set at Rs 23,250 per ton, but it was revised several times depending on the movement of oil prices. Now, with crude oil prices declining, the government cut the windfall tax to nil. They also slashed the tax on diesel to just 0.5 rupees per litre. Currently, only diesel carries a windfall tax, while crude oil, aviation turbine fuel and petrol are exempt from any such taxes. Now, while windfall taxes can generate revenues for governments and offset the societal cost of high prices, they can also impact the profit margins of oil-producing companies. Now, this news will likely come as a relief for oil companies. However, there's one development that could be a spoiler. While crude oil prices have dropped from record levels, OPEC nations have reduced their oil production in a recent move this week. Why exactly would they do this? Oil prices have plummeted by more than 50% in the past year, dropping below $75 per barrel. And OPEC knows that an economic downturn is looming somewhere. They're taking action to boost prices and make a profit while demand is still strong. Brent crude prices increased by just about 10% in a week due to OPEC's decision to cut oil production. Now, the big question is, will the windfall tax stay at nil, or will the government increase it once again to offset rising oil prices? Only time will tell this. It's been a roller coaster ride for the Indian markets, with the RBI hiking the repo rate 6 times since May 2022. That's right, 6 times. The economists and analysts were expecting yet another 25 basis points increase in the policy rate today, bringing it up to 6.75%. But the RBI has now hit the pause button, keeping the rate hikes unchanged at 6.5%. The RBI has collectively hiked the repo rate by 250 basis points since May 2022, and the hike rates have varied from 50 basis points to 25 basis points depending on the inflation data. The governor has said that the RBI will intervene if future inflation data gets negatively adverse, which leaves the window open for another rate hike. Speaking of inflation, let's take a look at this chart. In November and December, the CPI inflation came below the upper tolerance of the RBI. However, in the first 2 months of this year, inflation went above RBI's upper tolerance limit of 6%, with core inflation still remaining elevated. Also, as we mentioned before in the windfall tax story, OPEC nations have cut oil production to induce high prices. Given that India imports a lion's share of oil, this is bound to impact us. So with inflation still elevated and recent production cut by OPEC, and going by the RBI governor's speech, we cannot completely rule out another rate hike in the near future. So what does this news mean for you? Reducing the windfall tax to zero does not mean that the levy has been scrapped or abolished. It is usually revised, and it will depend on international oil prices. This will have an indirect neutral impact on you. Though another rate hike cannot be ruled out, the rate hike pause taken by RBI does bring much needed relief to the volatile markets. This will have a direct positive impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.